In this video, we will guide you how to invest as a teenager in 2023. So before we get started, make sure to hit that like button, also subscribe to my channel. Investing, essentially, is putting your money into something with the hope of a financial return. And it's one of the best ways to build wealth and save for your financial goals, from retirement to your dream home. While most people start investing as adults, investing as a teen can give you a head start on saving for the future and learning vital money lessons. Investing may sound complicated, but getting started is easier than you'd think. Yes, even for teens. Parents and teenagers will learn the benefit of investing for teens, the best investments for this age group, and what accounts you can use to start investing. Investing as a teenager provides you with a significant financial advantage as you get older. You have more time than most investors to set aside funds for retirement and start investing. You can benefit more from compound interest, and you can even enjoy youth tax breaks. Not to mention, learning how to invest as a teenager will give you valuable experience for later in life, when you can put larger sums to work, and it'll put you ahead of the curve. According to Fidelity's 2022 Teens and Money Study, which polled teens ages 13 to 17 about their attitudes and behaviors around finances and investing, a mere 20% of teens have started investing, and more than 70% admitted they have zero knowledge about how to trade stocks and exchange-traded funds, ETFs. Figuring out how to start investing as a minor might feel difficult. If so, you're not alone. The same study showed that more than half of teens believe investing is too confusing. How old do you have to be to invest in stocks? Before you consider signing up for one of the best stock apps on the market and funding your account, you'll need to ask yourself, how old do you have to be to invest in stocks? Yes, apps like Robinhood and Webull look like they were practically designed for teenagers trying to invest by themselves. You still can't legally participate in the stock market on your own yet. If you want to learn how to invest as a teenager or minor under the age of majority in your state, you should open a joint brokerage or custodial account through a number of the best investing apps for beginners. Start with stocks. You don't have to be a rocket scientist to start investing in stocks. In fact, by researching stocks and selecting which ones to invest in, you'll learn a lot about how the stock market works. Overall, this process is incredibly valuable for teenage investors since you can learn more about how the market works and some important investing terms. To start out, consider choosing a company that you enjoy and, most importantly, trust. It's fun to be able to say you own part of a stock like McDonald's and the Walt Disney Co., but these have historically been steady earners too. Consider investing in a few of the stocks on the Dividend Aristocrat list. There are names you'll recognize, such as Coca-Cola and Target. These are companies that have proven histories of increased dividend payouts. That means, on top of the gains you'll get when you eventually sell the stock, you'll also receive cash distributions on a quarterly or annual basis. Invest in individual stocks. Investing in individual stocks, also called equities, is considered one of the best ways to generate growth from your savings. But this investment vehicle also comes with a high degree of risk. When you buy a single company's stock, you effectively get to share in that company's successes and its failures. If the company grows its profits over time, it's likely that other people will buy the stock, driving up the worth of your shares. If the company struggles to generate profits, existing shareholders might decide to sell, reducing the value of your stock. Value stocks. Value stocks, on the other hand, are expected to generate much of their returns from what is effectively a reversion to the mean. Think about a pendulum swinging back to the middle. The basic premise here is that from time to time, good company stocks trade for less, sometimes far less, than conventional wisdom would say they're worth. Value investors believe that even if the company doesn't grow much at all, other investors will still see that the stock is undervalued, buy it, and drive up the worth of their shares. Dividends. That said, if you invest in the stock market, price gains aren't the only way you can grow your money. Some companies will pay you cash, called dividends, in regular intervals, simply as a reward for continuing to hold their stock. Nearly 40% of the long-term performance of the S&P 500, a collection of the stocks of 500 companies that represent the American economy, comes from dividends. The rest, of course, come from price gains. Thus, Choosing to invest in dividend-yielding stocks as a teenager can become very lucrative long-term. How much you will receive in dividends varies from stock to stock. Different stocks have different yields, a percentage that's calculated by taking the company's total annual dividends and dividing by the share price. Companies pay in different intervals: monthly, quarterly, semi-annually, or annually, and many companies will increase their dividends over time. What you do with those dividends is up to you. Some people spend the income, other people take that income and buy different stocks, and still other people reinvest those dividends into the very same stocks. You can use stock apps to trade individual stocks, but naturally, you'll want to conduct research before trading, which you can do by reviewing the latest information on stock news apps and stock research sites. Invest in ETFs. While many mutual funds have a number of share classes with varying annual expenses, sales fees, and investment minimums, ETFs don't. An ETF has the same expenses for everyone, no matter where you invest in it, and the investment minimum is the price of one share. Or, if you use a micro-investing app that offers fractional share investing, you can buy for as little as $1. Also, the vast majority of ETFs tend to be index funds, which means that rather than being managed by an individual or a team of humans, the fund instead automatically tracks a rules-based index, like, say, the S&P 500 or Dow Jones Industrial Average, by investing in the stocks that make up that index. Also, like stocks, ETFs can pay dividends, and you can compound both the fund returns and the income over the long haul. Another great feature that makes them such a great investment option for teenagers. If you sell ETFs or stocks, mutual funds, and other types of investment vehicles, for that matter, within a taxable brokerage account, you could be on the hook for capital gains taxes. Or if you had a bad year and are selling at a loss, you could actually save on your taxes. What do you think of our video? Let me know in the comment section below. Before you go, please hit the like button and subscribe to my channel. Thanks for watching.